Welcome to the Retiring Real Estate Investor Podcast, where we will discuss how to defer taxes on the sale of your property, earning passive real estate income, and everything you need to know to go from active investor to passive investor. Join us as we interview passive investment sponsors, explore the journey of other retiring real estate investors, and share our due diligence process we perform to select passive investments. Investment advisory services provided by Insight Investment Advisors, LLC, a registered investment advisor. This podcast is only intended for clients and interested investors residing in the states in which we are registered to provide investment advisory services or exempt from registration. Please contact us to determine if the firm provides investment advisory services in the state where you reside. All content on this podcast is for informational purposes only and should not be considered investment advice. Material presented is believed to be reliable sources, and no representations are made by our firm as to another party's informational accuracy or completeness. Insight Investment Advisors, LLC and its representatives do not provide tax or legal advice, and nothing herein should be construed as such. Always consult with your tax advisor or attorney regarding your specific circumstances. Oh, it is recording. It didn't tell me. All right, we'll have to edit that out. Hello, everyone. Welcome to another episode of the Retiring Real Estate Investor Podcast. I'm your host, Brandon Bruckman. I am joined by Eric and Ben Nelson. They are partners with Wild Oak Capital. They are real estate syndicators. And we're going to spin this episode a little bit differently. We've talked to a few people in the real estate space before, naturally, but we haven't talked a lot about and dived into lifestyle around that. And so that's going to be the pillar of our conversation. We'll walk her a little bit around that. But we'll start there and work our way back. Guys, thanks for joining me.
Thanks for having us, man. Appreciate it.
Yeah, our pleasure. Thanks, Brandon, for having us on. It's awesome.
I'm going to turn it over to each of you to give a little intro about yourselves. Tell our listeners sort of where you're coming from, how you ended up here. Give them the backstory.
Sounds good.
Well, Ben, I'll let you go first.
Sounds good. My name is Ben Nelson. I produced action sports for almost 20 years is my background. So think like Red Bull, X Games, Nitro Circus, World Games, things like that. It was incredible. And I loved every minute of it, but it became very apparent. When I'm getting text messages on my phone, like, Happy Father's Day, Dad, can't wait till you get home. And it became very apparent that I was not doing I didn't have the right balance as far as trading time for money, right? Like that graph of, the curve going up, I was trading time for money and I was gone. I loved what I was doing. It was challenging. It was cool. We'd go to cocktail parties like, oh, cool. You're jumping this guy off a cliff. Like, yes. But ultimately, Eric and I had a lot of conversations to start. And we really found that real estate was probably both the best place for us to combine our intelligence and our capabilities, but also just it gave us a much bigger lever for the future. So I'll let Eric kind of fill in. I'm sure we'll talk more about that.
Yeah, my background is in engineering. So I was kind of the opposite. It was super boring, actually. Like, I never really liked what I was doing. And so when I started looking at real estate, it was kind of like, oh, well, I could find a way to retire. Because what happened was I looked at like my 401k or whatever, and like the nerd that I am, I did a spreadsheet and I was like, oh, I have to do this engineering thing for like 35 years. And I'm like, ugh, like what can I do? Started looking at real estate, started buying some rentals. Then over time that grew. And then I met some folks who were doing syndication and we're like, oh, okay, well, this actually does fit our skill set and you can scale it and we can provide really cool investment opportunities for people who want to invest passively, right? So people have money and they're like, I want to be in real estate, but I don't want to really do the work. We're like, well, we love the work and the hustle, but we don't have all that much money, right? So it's kind of a good marriage. And then, yeah, kind of putting the team together. Ben and I naturally have things. He said intelligence. I think maybe lack thereof, but maybe combined we have good intelligence. No, I'm just kidding. I think we both kind of have different skill sets, is what I was meaning to say. And so putting those together with some other folks on our team has kind of come together. And then to your point, Brandon, you mentioned like lifestyle, and Ben sort of quit the action sports, so to speak, to be with his kids. I kind of quit engineering to like quit hating my job. And then eventually got more and more into lifestyle, and we can get into that for sure. But that's kind of the background.
What tipped you guys off to real estate as sort of a solution? It sounds like there was enough motivation, maybe in your day-to-day lives, where you were seeking something. What tipped you off to real estate?
I'll give Eric credit here, to be honest with you. I remember vividly, I was sitting at this desk and I had 3 different sets of plans set out for these events we were running. And he called me and he's like, hey, I know that we've been and we talk a lot, like as brothers, but we probably talk 3 times a day, and half of it is text messages about football and fantasy football and things like that. But it gets serious there too. But we talk quite a bit, and he just said, hey, I think we're in a similar place where we're both realizing that we've sort of hit that last gear of what we want to do here, and there's more for us to do. So I know Eric had a couple small single families. He had some multi in Durango nearby. So we started talking on a pretty serious level and we put together we bought 2 quads together in Lubbock, Texas, along with an investor. And it was a JV deal. It was something you talk about all the time. Like, we brought all the hustle. They brought a little bit of money for the down payment. And that was the first real estate deal that we did together. But Eric was the one that said, hey, I think this could work. Like, he'd had a couple of conversations with some syndicators. Eric, I'll let you fill in a little more information there.
Yeah, I mean, I think so here's kind of what happened with me was I was trying to find other opportunities to provide a retirement, and it doesn't take long until you get real estate. And then I remember like having beers with a friend of mine at a bar, and he's like, hey, have you heard of Bigger Pockets? And I think lots of people who get into real estate have that similar story. I'm like, no, what's that? And then I just like binged episodes like 200 to 300, and Brandon Turner at that time was buying single families, right? So I was like, sweet, that sounds good. So I actually just started like calling every for rent sign, and I was going like, this is dating myself, but I was like on Craigslist calling the rentals saying, hey, I don't want to rent your property, I want to buy it, would you sell it to me? And started doing like owner financing, kind of creative finance. It's sort of how I got my start, because we didn't have a whole lot of money when we were young, of course. So that's kind of how I got the start. We had a handful of rentals, and all of a sudden I met someone who's like, hey, you're pretty good at the hustle, you're pretty good at the math thing, you're pretty organized, I think you could be a syndicator. And at first I was like, no way. I was like, I don't want to do what I do with money. I don't want to partner with anyone. I kind of like this like little thing I have going. But it took some time for me to kind of get going in that. And I was like, oh, okay, actually this would work. But real estate in a larger sense is definitely a team sport. So I knew I couldn't do it alone. So I started looking for partners. Early on, I partnered up with a guy named John. We bought one deal, and then another partner named Shane, who's still our partner today, amazingly smart guy. And then we needed someone else. And so the next kind of obvious choice was Ben. And so that was kind of the progression of how it all took place. And it was really a lot of luck, a lot of people in the right place, and a lot of mentorship. I tell people, if you're going to go really, really, really heavy into it, a mentor or a group or something is extremely valuable from my perspective.
Yeah, let others that have walked the path teach it to you, right?
Yeah, I mean, you're not starting anything new. You're sort of stealing what they give you. And so we do that now. We teach people how to do this. But I had a mentor. I had a coach that I paid, and he sort of walked me through it. And then the first 2 deals we did, he signed with us on the debt, because that's kind of what you need. And so anyway, I don't know if that, I don't want to go too far in the weeds, but basically that was sort of the backstory of, oh, real estate's cool, it can help me retire. And all of a sudden I'm like, oh, if you scale it, it can actually replace your job. Now that sounds pretty sweet too, because I love real estate, but I didn't really love engineering. And so it's kind of that progression to get there.
No, it's very interesting and let's dig into the weeds for sure. It's interesting on the mentor part. It seems like a very fork in the road spot where there's a lot of pitfalls that I could see there. Like, how did you guys make that decision about, who to pick? What was that criteria look like? Walk through that sort of decision point.
I will say this was just straight up dumb luck, but I went to a meetup, and anyone listening, it does. I mean, sometimes it works.
Sometimes, yeah, we'll take it. I'll take luck.
if you live in any major metro and you're interested in real estate, there are like 10 meetups. So just get on meetup.com or Facebook or some other thing, find a meetup and go there and start talking to people. And if several people say the same name, you're like, oh, okay, cool, that guy's legit, right? So I did that. I went to a meetup. I met the guy who's running the meetup. He's now a very good friend of me, partnered on lots of deals. His name's Jens, and they were all like, Jens does syndication, super good dude, really good teacher. And so that was the first time I heard his name. And so then it took me several months of getting to know him more, going to his meetup more. And I was like, all right, this guy's legit. I'm going to hire him and see what happens. And it turns out he is an excellent coach. But it was a little bit of dumb luck in that I didn't really look at a whole bunch of other people. Now, if you Google like real estate mentor, I mean, there's hundreds, right? Or thousands probably out there. So you kind of have to do your research in that, ask other people, ask for referrals, ask for references, like that kind of thing. but I think it's a really important thing to do if you're going to go all in. And that's probably true of really any industry. If you're going to go on your own in any industry, I think it's important to have a good mentor.
Yeah. Mine was a little different. It's the same thing. Dumb luck. Eric introduced me to Jens. I had some coaching with him, but we didn't jive in the same way that Eric and he did. They're both spreadsheet guys. They both can do math much faster than I can. I tend to be more of a people person. And that's where my skill set is, like seeing problems and seeing things and seeing solutions, especially when it comes to people. So I actually met Hunter Thompson, who's a capital raiser, early on before he really started the Raise Masters thing. I think he was still running like the Intelligent Investor event. And when I met him, and got to know him really well and his team. And, I've met innumerable people in that space that are just incredibly smart. It's the same thing. I think, network and the ability to put some really smart and capable people around you and somebody that's walked the road ahead of you. Because like Eric said, we're not stealing any, or we're not inventing anything. We're basically just stealing everybody's good ideas and trying to make them ours.
Yeah. Wheels spin around, right? We don't need another one, but it's the sort of the takeaway. And we talk about this. I find myself saying this a lot on this podcast is like, take some action.
Yeah.
Like, go to the meetups, start reading the Bigger Pocket stuff, buy something, like take some action. Otherwise, what are we doing? Like we can stare at we can flip through web pages left, right, and sideways and do all the research you want. But if you're not taking action, then you're never going to get there.
For sure. Or find somebody that's willing to do it on your behalf, right? Like I think that's why we love working with people, especially in the space. Like we talked about the folks that are still working, they're going to continue doing that work. They like their, there's a lot of people who don't hate their job. They like their job, but want to build something on the side. So that's when we have conversations with investors, it's a big part of that. It's like, what is it that you want to accomplish? If you don't want to do the work, we're happy to have that conversation. We want you to be informed. We want to spend some time like making sure you have the education, but man, if we can help you lift, we're here for it.
Yeah, agreed. I'd say that a lot too. All the time. I say take action. Just start, because you're going to figure it out as you go. And that's really the only way you're truly going to figure it out. So whatever it is you're looking to do, get started. Now, I think the best way to get started is education, like you said, meetups, books, podcasts. But once you're ready, you got to just go. Again, any industry, real estate specifically, though, you're just going to have to buy that first rental and learn on the fly. And sometimes you're going to make money on the first one. Sometimes you might break even. Sometimes you might lose a little on the first one. But the education you get is super, super valuable. If you don't do it, you'll never do it. So I love that, Brandon.
Talk about taking that leap then from doing some single families, starting to get into this business, the idea of syndication comes your way. Talk about that, making that leap from the first deal, the deals that you were doing on the single family to the first syndication. Talk about how that process went.
Yeah, it is a big leap, right? Because the biggest deal I bought up until that point was $1 million property, and it was a sixplex in Colorado. And that's a pretty good price actually for a sixplex. But I remember, like, as we're approaching closing, I was like laying awake looking at the ceiling, like, $1 million. Am I insane? Like, this is just, am I crazy, right? Like, this is just so much debt. I don't know really what I'm doing. So I remember thinking, like, I don't think I could ever buy anything more expensive. And then all of a sudden, once you jump in the syndication world, you're kind of looking at the like $5 to $15 million deals, and just kind of like a different scale. So I don't know that I could explain it other than you just kind of have to say, all right, I am prepared. I do have the mentor. I do have the background. I do have the education. Same thing. Like, I'm just gonna have to go for it. And your first one is always the hardest. First one of anything is always hardest, right? So that one was a challenge. I mean, getting through it, really trusting the process, trusting my mentor that he was like, you got this, leaning pretty heavily on people, like you said, who've done it before me. Then once you do the first one and it closes, and then you're like, oh, okay, like that was a lot of work leading up to this. We have a good manager in place. Let's go do it again. It's kind of like anything. The first one's really challenging. And then after that, you kind of get to build like, oh, okay, well, here's what I would do differently. Here's the process I'm going to put in place. And now we've done it quite a bit. And now we have a pretty good team and a pretty good process. So it's like anything. You're just going to have to give it a shot. And the only way to do it really is just to get as educated as you can and then take the leap.
Yeah, no, that's interesting. It's perfect. Help me think a little bit about, so I imagine you flipped to multifamily at this point from the single family. Talk a little bit about markets, because I've heard Colorado, I've heard Texas. Eric, I know you're based in Spain. We'll get into that in a bit. But how do you guys think about markets? And then congruently, how do you think about that out of market manager? I mean, this could be very tough when you're not, imagine you can't be boots on the ground in these places every single day.
Right.
How do you think about both those things?
You said it perfectly. It's team, man. Like the ability to have a team that you trust. So right now we're firmly in Texas, Oklahoma, and Arkansas. We look at deals, but really we've started to hone in on those markets, specifically like Tulsa, Oklahoma, North Little Rock and above, up to Bentonville. But really what it is, it comes down to the team and the people that we trust, right? So we've got two different property managing groups that we work with hand in hand. At this point, I would consider them as close to being on our team as you possibly can, being a separate company. We look at deals, we underwrite with them. So we get a deal that we really like. We'll underwrite it first, obviously, and kind of go through it. But once we're ready to poke some holes in it, our next call is to our property managers and to say, hey, do you like this? What about they'll underwrite all the way through with us to make sure that we're seeing the same thing that they're seeing. So it is, in the beginning, it's tough, right? Like I'll say the first deal that I was a part of with the group, we went through 3 property managers, and some of it is their fault for sure, but I would say some of that is our fault as well. Like learning the thing, like setting expectations, how we're tracking it, a lot of those things. Again, it's some of the stuff that you don't know till you don't know. We went from 8, units in Lubbock, and then suddenly jumping up, and there is something to be said for, like, if you can manage 8 and handle 8, you can manage 35, you can manage the 50, and in some cases it becomes a little bit easier. But that's the biggest thing, is having that team on the ground, and don't take for granted the research. You can have some decent recommendations of some folks, but we fired the first property manager that was highly recommended to us for a lot of reasons, right? Like we just didn't jive. There were some things there, but the team that you have in place is ultimately the most important thing. And so we have that now, and we feel very, very confident about moving into these spaces.
Yeah, it does take a little time. I mean, it's annoying to hear if you're listening to this and you're like new, but it does take time to build trust, because our manager now, like Ben's point, they'll underwrite with us, but they trust that we know that deal's good. Like we're not going to send them a deal out of the blue, right? Like a broker's not going to email us and then we'll be like, okay, let's underwrite it together. We will have an LOI very close to being accepted. I mean, I just want to put that out there. Like we don't want to waste our manager's time either. Ben really covered that well, so I won't say anything more about that. But you mentioned markets. My general spiel I'll give you about markets. I think there's hundreds of markets in the United States that work for multifamily or lots of asset classes. Here's what I tell people. In my opinion, I stay away from the Gulf Coast because the hurricane insurance issue I don't like. I stay away from the East Coast. It's too expensive. I stay away from the West Coast. Same thing. So basically anything east of Colorado, north of like hurricane zone, and south of a big freeze thaw, all of that zone is a big part of America that works for what we're doing. You just have to be patient enough to find the deals. So, I mean, literally, I'm talking hundreds of cities and small cities that this business works in. Now, I'm not saying go out and like look in 50 markets. In fact, a lot of people say that. I totally disagree. I think you lean into 1 or 2, get to know the brokers, really heavily know the market. That's just my opinion, but there are lots and lots of markets that work. So people are like, oh, what market do I invest in? I'm like, well, I'm going to give you the swath, and then you just start deciding, right? I can name 50 off the top of my head, probably not 50, 30 that would work really well. And so we've chosen a handful, 1 where we have very good property managers, and 2 where we know the market. And also we have a good reputation there. So it's kind of this like, again, it takes time, but if you're starting from scratch, kind of just like pick some, darts, start going, start calling brokers. When you jive with brokers, when you like that city, start honing in. That would be my advice.
So when you think about moving forward, is it honing further into those markets that you selected, or do you hit a point where you're like, look, I'm not finding the deals in those particular markets? Let's move down the list of that, say 30 that this could work in. Do you start moving to that next market? How do you make those decisions?
Yeah,
Ben, take this on. I think it depends on the person, depends on the day, but I'll let Ben take that one.
No, I think we're very purposeful about how we move ahead. So, for example, we love Tulsa, and that's one of those things, like we've gotten to know the market, we've gotten to know the people. Like I can spend 30 minutes telling you why we like that market, right? But also we have this similar managers who have teams in Oklahoma City, for example. So we look at that, we underwrite deals. We don't have one yet, but that'd be something that we'd be very interested in because we know the players and we know that we can move into that market effectively. I would be far more reluctant if all of a sudden they're like, we have this deal in Madison, Wisconsin for like, cool, the numbers work, but I don't know anybody in that town. Could we get there? Sure. And if the deal makes a bunch of sense, I would probably say, hey, we need somebody that operates in this market that we trust. I would say that's the other way you can get into it too, to Eric's point is, mentorship. Like if I want to get in on a deal, maybe I just go help, right? Like maybe I understand that my mentor has something in Madison, Wisconsin. I jump in, help that out, learn the ropes, and either, make my own relationships from there or figure out what that game is. But for me, I think I don't think there's necessarily a shortage of deals. Right now, we've seen this ebb and a flow of money was extremely cheap. Everybody's a genius. Like you could get in, right? And it's kind of come due a little bit in the sense that it's leveled out. You can still find cap rates that are in the 7s. You can still find some of that. But I would say for the most part, the people who are still in the market, for the most part, are the ones who are actually doing the work, right? Like you don't have the fly by night folks anymore. So I'll let Eric kind of follow up on that.
Yeah, I think I will just flat out say it. Multifamily got pretty crushed in certain markets in 2023 and 4. Lots of people lost a lot of money. And I thought, in my opinion, there were some foolish choices around debt, but there's also some market conditions that just sucked, right? Like I have a good friend who bought a good deal and their rate went up by ×2, like they had a 4 rate and it went to an 8, and their insurance more than doubled. And so he lost all of his investor money. He was like totally beat up about it. And good guy, decent deal on paper, things happen, right? So a handful, I'll say a lot of those deals happened between 2022 and 2024. So lots of folks are like, multifamily is the worst. I kind of look at multifamily right now as a very, very good time because of that. And it's like, I don't wish ill upon anybody. It's such a bummer that money was lost, but there's an opportunity in that now. Luckily, we were never in the floating rate kind of disaster that a lot of people were in. And again, we weren't in hurricane zones where insurance went nuts. So some luck, but some also choice to just be like, we're not going to buy a 2-year debt. It just doesn't make sense for our deal because it's a 7-year deal, So there was a handful of those things that went down. And so again, we're kind of getting in the weeds here, but I do think now is a good time. I just think you have to be wise about what you're doing. It's true of anything, right? Like you can't just buy a deal because you like it. Like the numbers must work. You got to be smart about how you underwrite it.
Yeah. Eric coaches and he, we tag team a little bit and we'll see some of his students who are first and new to it. Like, I found this deal off of LoopNet that's been on the market for 2 years and it's in Tallahassee. Like Eric's excellent at being like, this is why I don't know that this is the best deal for you, but let's underwrite it and go through it.
Here's why it's been on the market for 2 years. It's probably to answer that question first. Talk a bit more about, I'm piecing it together a little bit between the lines, but talk more about what that buy box looks like. So we got a sense of the market. Eric, you laid that out. Go a little deeper on what's the buy box? Like, what does a good deal look like at this point? Obviously, the numbers need to work, but give us a sense of like, what's that buy box that you're kind of sending to brokers that brokers are finding for you?
Yeah, for us, Ben, I'll take this one just because I'm the math guy. No offense. I think for us, no, I'm just kidding. Ben does,
Back up, I got it.
He kind of teases himself. But anyway, so we look for actually a little bit smaller deals. One of our niches is like people always say 100+ units, and there's a good reason for that because you have the ability to make payroll work. So for us, most people are looking for 100+. So we found a kind of a cool niche in the 50 to 100, to be honest. Also, as Ben mentioned, it's hard to raise capital right now. So if you have a $5 million deal, you need to raise right around $2 million. And that's an achievable number for, like, we're just a small group of guys from small towns, to be honest. And that's an achievable number for us to raise. So, the other thing is once a deal gets over 10 million, you're starting to compete with family offices, some folks who don't need quite the returns you do. So our buy box is typically like 10 million or less, 50 units or more. That's kind of our buy box. For returns, we want to see like 7-8% cash on cash yearly. And then we really would love to see like a 20% annualized return. So, that's going to be 18-19 IRR, something like that. So that's kind of like where we're looking. You can tell a broker what you're looking for, but they're not really going to know the cash on cash or IRR. You're going to have to do that yourself. So it's easier just to say, we want a deal between $5 and $10 million in this neighborhood, C or B class. That's kind of our buy box.
Got you. And then talk a little bit about, are you seeing more deals now that are fitting that buy box? Is that going up? Is it decreasing, increasing? Like, what's the general state of play?
To say this, but it's a very good time to buy. So anyone listening, we're just going to give our cards.
Okay.
I don't hate to say it. I mean, I think it really is. We are seeing way more deals pencil because either seller debt is coming due or rates have dropped a little. So cap rates have followed slowly. I think when the Fed begins to actually reduce rates, we might see it faster.
Mhm.
And then there's less competition, honestly. Lots of people left multifamily. So even if the deals aren't quite penciling, we'll just say, here's our number. And then 6 months later, it'll come back to us. And we'll just say, great. Okay, that, if it's a win-win for us and the seller, we don't want to gouge somebody. We want to take advantage, but they might need to sell the property. And so our number is what it is. A lot of times they come back around. So the simple answer is, yeah, we're seeing way more deals, but we're also seeing way less competition.
Yeah.
And so it makes for a good market for us.
I will say that there's work to be done too. So again, it is always annoying when you're starting and you're hearing out. Like, we've developed a reputation with some brokers as well. Like, we close deals, right? Like, we've never retraded up, we've never backed away. We're very open, we're very honest. And so that's to Eric's point. I want to reiterate that when we go to brokers, we say, hey, we've underwritten it. Here's our underwriting. You can go through it, but that's our number, right? Like, if you're asking 7.5, our number may be 6.9. Here's why. And we're not going to move from that because we don't think it's going to work. Right. And we went through this era where everybody was out competing, outbidding, and overbidding for many reasons. Right. Like, I don't think we have to elaborate on that, but I think that season is over. So I think that there's a return somewhat to reality for sellers. I think there's a return somewhat to a normalcy. Plus, I think that new shiny object syndrome has moved on, right? That you have a million things on the internet of, like, now people want to buy businesses, and like that's the new cool thing.
Yeah.
Whereas we're still here. Like, we believe in the model, we believe in real estate. It's a long game. This is not a get rich quick scheme. So most of the get rich quick folks have exited, and now you're left with people who are, we'll compete against 2, 3, maybe 4 different folks or groups. Whereas before, you put an LOI and you're one of 27 on a deal. People are just spreading LOIs around. So it's changed, but I think for the better, to Eric's point.
Yeah. Good. All right. Maybe the 5-minute version of why I like Tulsa instead of the 30-minute version. Can we do the 5-minute version of why I like Tulsa? I'm intrigued. I mean, and as sort of bit of background, frequent listeners here will hear us talk about off markets. I mean, I have Milwaukee in my background. I talk a lot about investments we made in Cleveland, Detroit, Akron. I mean, places that have stigma and that people won't invest in. So now I'm interested in Tulsa. Tell me about Tulsa.
Man, again, 5-minute version. I think Tulsa is an underrated city for a lot of reasons. And it's coming up. I think it's got a ton of, the Tulsa King, like, there's some limelight that's been shed on it in recent months. But I think Tulsa was a really forward-looking town because they went through the trudges and the trenches. It was an oil town from the 30s and 40s that went bust. It's a beautiful town. There's tons of this Art Deco, and it's seeing this resurgence because of a lot of programs they put in. So through COVID, there was a program they put in for Tulsa remote workers. And I think originally, it's changed over the years, but I think originally it was $40,000 that they would give you in cash if you moved there and bought a house. They give you something like $25,000 to move there as a remote worker, if you just came and worked. And there was a time period. I believe initially it was a year to 2 years. And they've kept that program up. It's still $10,000. If you move there and you apply for this program, you can get $10,000 in your pocket to go and remote work in Tulsa. But what that does is it brings this swath of sort of that 20 to 30-year-old person to town. So then all of a sudden you have boutique shops popping up, and you have hotels, and you have restaurants, and you have a lot of these Art Deco things. Like, it's kind of like that pioneer program, right? Like the people moving west for the gold rush. I read something the other day, is like, only 8% of the wealth that was created was because of actual gold. Everything else was the industry that was created around that. And so that's what they've done, is created this. If you can go and you want to live in Tulsa and remote work, they've done a ton of work on all of their cultural implements. So they've got tons of, like, the ballet and the theater, and there's a ton of music goes through there. There's a cool thing called the gathering space. There's a green space, but that demographic of that young workforce is huge. They're investing tons and tons of money. There's some crazy number, like an $8 billion aluminum plant that's going in there. It's creating thousands of jobs. Like, remote work is a huge thing, like I said, but there's a lot of on the ground jobs that are bolstering up. The rate of increase of rents there is about a 3 to 3.1% is what they've looked at for the next year or two, which is above a national average. And you're looking at 94 to 98% occupancy across the board for the last couple of years, and predicted into the future. So, I mean, I know that's like a top line volume of super metrics, but when you start stacking a lot of these things up, and the fact that we have excellent property management there and excellent people on the ground, we know it well. We understand the cap rates. We understand what we're going to pay for that deal and what that return looks like based on the fact that we've been there and done multiple deals there. Like, it just becomes sort of like a no-brainer, in my opinion. And I actually really like the town. People I think Oklahoma kind of gets a bad rap, and I've never had a bad time in Tulsa.
I'm the same way. I think it's cool. I mean, that's the honest truth. I go there and I enjoy it. Like, I'm like, I could live here. If they had skiing in Tulsa, I would probably, I mean, I would consider living there. It does get a bad rap. And the other thing too is just straight up simple math. If you listen to Bigger Pockets, there's a thing called 1% rule. So if you buy a home, a property for 100 grand, 1% of that should be your rent rate, like $1,000 per month. And it probably cash flows a little bit. Tulsa generally multifamily is going to be more like 1.25, 1.3, 1.4. So the price per door and the rent rate just works really well for our business. And people have a little bit of extra spending money compared to a state like Colorado or California. So the rent is still really affordable for most folks. So it's not like you're gouging them, it's just how the market works, right? So all those things Ben said, I completely agree with, but it also is just like a straight up base fundamental number that the purchase price to rent rate works really well for our business.
And you can go deep in the weeds for like anybody that's listening that's a super math nerd, not to jump on Eric's toes of being the math guy, but also the cap rate and the leverage there is also more attainable, right? Like that arbitrage, as much as you're going in like 6s and 7s, is still in Tulsa and in surrounding states or surrounding locations in Oklahoma. Like Eric's mentioning like an East Coast or West Coast where your cap rates are in the 4s and we're lending in 6s and 7s right now. That math just doesn't work either, right? Like it's a no brainer.
Yeah. There's a Midwest thesis overtone here that is applicable, right? I'm hearing a lot of the same things, especially around affordability. That's a big deal when we look at thesis of why this works is, can you afford the rent? Consistently afford the rent, because then we can ride sort of the up and down. My guess also though in Tulsa too is that you do have less competition generally speaking than in some of these other markets. That has to help. And how about supply? Are you seeing new construction? Probably not in the B2C range.
Well, that's the thing. Not in the C range for sure. You're going to see new construction, but a lot of it's downtown for the folks Ben was mentioning. So you're getting a lot of the A-class stuff. We're not really competing with that, right? So plus that's not really our buy box. It's just not what we buy. So yes, there is going to be new construction. Of course, folks are moving there, but no, that 1980s C-class that we like, you can't rebuild that. And you shouldn't rebuild that, by the way. That's why we have value add and we fix it up.
Yeah. And the demographic there to Tulsa again, like I'm also like, I love those facts, right? Like I love looking at why this works. So the deliverables, they've gone down almost 1,000 units from last year to this year. So the absorption rate, and what's also interesting is that Tulsa, as far as the total demographics, there's like a big swath of Southern California and then it moves into the Midwest. And I'd be interested to look, and Brandon, I'll look it up for you when you're done. But there's a higher volume of families that live in multifamily in Tulsa than across a lot of the other market demographics. I think it's number 30 or something like that in the markets. I'd have to go back and find the exact number. But to Eric's point, is like that building in that downtown and that's kind of a rising tide lifts all ships. Like that nice product, some of these younger folks move in, amenities go up, and then families, even though they may be sort of on that outside market, but that's the stuff that we buy, right? Like we go in and we fix it up, we add playgrounds, we like fix up the pool that has been defunct for 3 years, and all of a sudden you've got a pretty nice little place for people to live, and we're all going to make a little money.
Yeah, no, that's the kind of thesis we like, where that just works and there's utility and there's sort of natural economics to it too. Makes all the sense in the world. I'm going to spin you guys to lifestyle a little bit, what I got really intrigued about pre-show. Where are each of you talking to me from?
Well, I'll go first because Eric's going to one up me, so he can get the icing on the cake. No, I'm based in Golden, Colorado. We both grew up in Southern Colorado outside of Durango. So mountain kids, small town kids, our mom was a rancher's daughter. Our dad was a farmer's son kind of program. Right. And so I think I graduated with 90 kids total in my public high school. So that's kind of where we started. Went to school at CU and then moved on. I kind of got, like I said, into production, lived a bunch of different places. I actually lived in Spain, and Eric came and visited me, and he stole my spot. So I'll let Eric jump into there. But I live in Golden, Colorado. I got 2 boys. We love being outside. We love hiking and camping. And like I said, that's the thing that I live my life around, is how can we spend the most volume of time building that relationship and not being gone. I don't want to wake up and be 70 and say, where did all the time go? We're purposely trying to build something now. And leverage that for people in our network also.
Yeah, well, Ben's right. I came to visit him in Spain years ago and fell in love. I think lots of people do. It's just such a cool place. And so a few years ago, my wife and I were kind of like, we should go to somewhere new every summer, was the idea. We're like, let's go to a new country every summer. That was just the concept. We're like, okay, cool. Let's spend a month somewhere. And so we went to Mexico for a month, and we're like, that was pretty sweet, but it wasn't long enough. And so we kind of were like, do you think that we could live abroad and continue what we're doing? And so had some real conversations with Ben mostly. I mean, I was kind of like, this is an idea I have. Do you think it's crazy? And he was basically like, no, it's freaking awesome. Like if we can do it and I can rely on them. I mean, here's an example is we have a deal under, we're trying to get under contract right now. And I can talk about it because I won't give you any details. But basically, somebody had to go there tomorrow. And I was like, man, I can, but that would suck.
Yeah.
And so Ben was like, yeah, man, like I'll shift some stuff and I'll go. And so, I have to rely on that team to be totally honest, like selfishly. But we did. We decided, all right, cool, let's do this. Let's take our kids out of school. We'll put them in a school here. We're gonna live and just try it out. And so we've been here a year and a month now. We love it so much we're going to do a second year. So our kids start school tomorrow, and we're just kind of living life Spanish style. And we wanted to shift in geography and in culture and food and language. And my wife luckily was adventurous enough to try it with me, and our kids love it too. And so we were like, we can do this overseas. And I think a lot of people, I mean, the lesson here is I think a lot of people could. If you work online, you can probably live anywhere in the world. So that fear is probably standing in your way. If you do want to do it, I would just encourage you like go for it because it's totally doable. Even with kids, my kids are 5 and 8, and they're having a blast.
Say like he sells himself short too. Like it's actually been a benefit in a lot of cases for us because now we have 24-hour coverage, right? Like we'll work our day here. I'll go to bed. We'll wake up and I'll have 72 emails from Eric at 2 a.m. for like picking up what I was like, we're ahead, right? Like
it is nice to email like everyone you know and know that they're not going to respond for like 6 more hours. And you just be like, all right, I'm going to go to the beach.
I like how that sounds. It's funny because there's the same theme here. I think of what we talked about getting started in real estate is the same thing when getting started to make this move abroad is you kind of just got to go do it, right? Did it start with that visit? Did you kind of do a test run with the family to Spain? Like walk through that like in more depth of that process of like, all right, we're going to do this. What did that look like in terms of actual prep?
Yeah, I mean, I'll try and go fast here, but basically, we wanted to be in a Spanish-speaking country. So we were looking in Colombia, Chile, Mexico. We looked everywhere. We just wanted to learn Spanish better. Was one thing, right? And they were like, I actually want to be in Europe so we can travel really easily. So of course, it pushed us to Spain, and then the weather kind of pushed us to where we are. Because you start looking at things like if we're going to live there, what does the yearly weather look like? Southern Spain's super hot. It's like Phoenix. Northern Spain's kind of like UK. It's really rainy. So we're like on the like just south of Barcelona. So that was like the process for the location. And then we're like, okay, let's hone in and find some schools because our kids, that's really important for us as education. Then you start finding schools and start applying basically to these schools. Then you're thinking, okay, what visa can we get? So we have a visa that's called the digital nomad visa, which means we have to work in the US and we can live here. And it's a really perfect visa for anyone who works online. Like it's also genius for Spain, by the way. So you just prove your income a little bit, apply for the visa. It's a pain, but it's totally doable. You get the visa, and then no, we didn't come here. Actually, I came here alone and drove around and found this town. A friend of ours tipped us off on this town. I was like, yeah, it was a great feel. I would totally live here. And I wanted to live in Barcelona. And Maria was like, no. Because looking back, she's totally right. Like looking at like living in a big city with kids for us, because we're from a small town, would be challenging. So we found a kind of a smaller beach community. And then the kids got accepted to school. We got our visa, and we just kind of like packed all our stuff in 3 bags, put all of our stuff in storage, rented our house at home, and came here. And by the way, speaking of that, like we rent our house for more than our mortgage. So we're making money on our house at home. It helps for pay a little bit more for our living expense here. So I do hear people, this is the final thing I'll say before I get off my soapbox. I hear people all the time say, I don't like where I live. Like I met someone at this wine tasting here, and he's like, yeah, I live in, I can't remember where. I was like outside of Dallas. He's like, oh, I hate it. And I was like, well, what do you do? And he works online. And I was like, well, why do you live there? I mean, that's seriously my first question was like, why do you live there? And I know that, a lot of people have family ties and stuff, but I'm like, you can totally move literally anywhere in the world. And it's very possible. I know that fear gets in the way. So I'm here to say you can totally do it.
Yeah, no, it is kind of a scary thing. And sort of what do you tell folks? Like, it feels like there's maybe some family aspects that might be holding them back a little bit, and then fear. Like, how do you manage that with family and friends that are obviously still in America?
Yeah, I mean, I think that's just like your choice, right? Like if you have a really good friend group, you have a really good community, there's hard to argue against that because that's great. Here's the thing is we did too. We loved where we live. We loved Durango. We had a great community. We will end up back there. So this isn't permanent for us. So it's kind of this easy thing for us to be like, we're just going to take either 2 or 3 years off and then we'll come back, knowing that if you're going permanently, I mean, that's just everyone's decision on their own, right? Like I can't say leave your community. But if you don't like your community, you don't like where you live, then change it. That would be my number one piece of advice.
Eric and I had this conversation early on, and he was talking to me about, and I'm just going to throw this out there, Eric. Like he was like, "Hey, well, you've been here a year. We're thinking about another year." I was like, "Absolutely, man. Like you've got the ability to be there for 5. Like be there as long as you have the time to go." And this is coming, like my boys are a little bit older, and it is an excuse, but like Eric has a perfect age of like kids. Like you can move them, and it's like do it now, right? Yeah. The thing is, your family, your community, all of those things at home are going to be there. Right. Durango, Colorado will probably be very similar to how it was. And it's no slight to Durango. Like that's why it's an amazing town, but it's probably going to be very similar to what it was like when you left. Right. So if you changed nothing, then nothing changes. So if you don't like where you live and you don't change it, nothing's going to change.
Mm-hmm. It's possible, listeners. And this purpose-built lifestyle. And we talked about this a little bit pre-show. We talked a little bit about not thinking enough about lifestyle on a day-to-day basis. It's hard. Right. We all get caught up in the task list. I'm looking at mine on the other screen over here. It's long, and most of it isn't very strategic about how I live my life. It's very tasky, and I would imagine a lot of people have that same thing going on. So here's your wake up call a little bit. Start thinking about these things before it's too late. Right, like time's ticking. So if you don't like where you are, you don't like what you're doing. There's about a million different ways for you to slice this real estate game up, so where you can build a lifestyle around it, right, guys? And that's sort of what you guys have done here.
Yeah, I tell people all the time, there's a million ways to make money in real estate. Find the way you like, find the niche you enjoy, or find the thing that makes you the most money, or both, and go all in. There's so many ways to make money and do it from anywhere you want. And I completely agree. I mean, one thing I started doing as we were moving, and this is just a good hack for anybody, is I was literally going through my calendar day by day by day. And I was like, what in here actually provides value for someone else or provides value for me and my family? And I had like so many Zoom calls with people that like were fine people, but they were just like, we were like talking at each other. And there was like, no, we weren't providing each other value. I was just trying to network a lot. And I was like, you know what, actually, I can cut a lot of that stuff out. So I started doing that. And so now I protect my calendar like crazy. Like people are like, hey, want to jump on a call? Because you hear that all the time. Want to jump on a call? And I'm like, no. Not unless it's extremely important, right? Or I can provide something very valuable for you. I don't want to talk to you on Zoom for 30 minutes. And that's not like, I'm not trying to be a jerk, but there's lots and lots of those things on your calendar. You can start just like accent. And then that thing you're looking at, Brandon, on like other screen gets like this long. And you're like, okay, cool. I can do that between 8 and 10 a.m. And then I can do the things I want to do. And pretty soon your lifestyle becomes more like what you wanted.
Yeah. We call it meetings about meetings for meetings. And there's just so much of that exists in our culture.
I think COVID played a role because we all like we were on Zoom so much it just became normal.
Yeah.
And then you just, I don't know, anyway, but I do think it's possible to like whittle down your to-do task list and then start thinking more about, all right, cool. Now what do I want to do? Right. Do I like to ride my bike? Do I like to hang out with my kids? Do I want to go to the beach? Whatever. Like that's the kind of thing you can put into your day, and it takes time and energy to get there, but you can totally do that too.
Yeah. Eric, I mean, I've learned a lot of this from Eric too. Like he's a master at kind of like that time hacking, but I would say I started with protecting a day. So I started taking Thursdays, especially in the wintertime. Like all of a sudden I had to figure out how to take Thursday for the most part off the table because I wanted to go skiing. Like I wanted to go up when a lot of people weren't going up. I live in the Denver metro. So unfortunately, like a Saturday equals traffic for skiing, right? But I can go skiing on a Thursday. I can get up, I can go skiing, make a couple of laps, and I can be back by noon, no problem, and have a full day. So if I start protecting Thursday and then working my way around the outside of that, so it's obviously like not as grand as moving to Spain, but like it's incredibly possible to prioritize those things. And I will say the thing that has changed also is now that my boys are getting a little bit older, you know, they're paying attention, they're asking questions, but kids, especially if you have children, they see more than you think that they see, right? And the way that you live your life and the things that are important to you, they're absorbing that. So I had a conversation with my son Luke about it last night because it's getting to be fall time. We're talking about winter, we're talking about ski passes. And he sees that we work out. He sees that I take Thursdays and I go skiing with my friends, or like it becomes a business thing. A lot of my investors I've met on the ski lift, right? Like there's a lot of those things. So being purposeful about, even if it just starts with a half a day, if it starts with like, I'm going to protect Friday morning so I can do X, just get started.
That's great. That's awesome advice. I stuck in my head as an interview with Warren Buffett and I believe Charlie Rose. When impromptu, not asked, Charlie picks up his planner and goes, "Hey, what's in here?" So yeah, go take a look. There's a lot of empty space in that Buffett calendar. Like, huh, okay. So if Warren Buffett has empty space in his calendar, we can all do it. It'll be okay. We'll make it through without filling the empty space. And you guys have figured that out. So let's find a day to protect and go do something good for yourselves. Guys, it's been really fun. Where can I point people to find you? How should they connect with you?
Sure.
Yeah, I think Ben and I are both very responsive. So you can just email us. It's wildoakcapital.com is our website. So I'm at Eric at Wild Oak and Ben's at wildoakcapital.com, and we'll respond. If someone emails me, I'll get back to them too. I do some coaching and some mentoring. So if you're interested to learn more, I'm not a salesy hard person, but if you're in that seat, then I would love to talk to you about that as well. But if you just want to talk about real estate, yeah, I'm very good at email.
Same. I'm fairly active on LinkedIn as well. So it's just Ben Nelson 303 on LinkedIn. You can find me there. Love to talk with you. Same thing. Like if you want to get outside, especially if you're local or you want to go skiing on a Thursday, hit me up. I'll be your huckleberry for sure.
I love that. I hope somebody finds you on the slopes from this. That'd be outstanding. Guys, thank you so much. This has been excellent. And everyone listening, thanks for listening. We'll see you next time.